Albert Einstein, the founder of the laws of physics, who gave us the theory of relativity, who had ever lived, said about tax. He said, the hardest thing in the world to understand is the income tax. Not quantum mechanics, not the speed of light, not the bending of space-time, the income tax. And if that was true for Einstein, imagine what it means for the rest of us. Imagine what it costs you every single year to be navigating a system that was deliberately designed to be difficult to understand. Now, here's the question nobody asks after they laugh at that quote. If the smartest person in recorded history found the tax code confusing, what are the chances your CPA has found every single provision in it that works in your favor? Let me tell you what is actually happening. You're making good money, real money, 6 figures, maybe multiple 7 figures. You have investments, you have property, maybe a business, and yet somehow every time you turn around, a massive chunk of what you earned just disappears. And you are not talking about bad investments, you're not talking about market volatility, you're talking about something far more frustrating than either of those things. You're talking about capital gains tax, the thing nobody warned you about when you started actually building wealth. So here's the mechanic. You sell an asset, property, stocks, a business interest, and you hand anywhere from 15 to 37% of that gain straight to the government. Not because you did anything wrong, not because you failed to work hard for it, simply because you were successful enough to have something worth selling. And the worst part, most high earners just accept it. They shrug, they write the check, they move on because their CPA told them that this is just how it works. But here's what Einstein understood about complex systems that your CPA's April filing cycle does not reflect. Complexity is not random. Complex systems are designed, and when something is designed, including a tax code, there is always provisions built into it for people who know how to read the design. The US and Australian tax codes are not written against you, they never were. They are full of provisions designed specifically for people in your position. High earners, business owners, investors with real assets and real gains. Legal provisions, statutory provisions, provisions that family offices, institutional investors, and sophisticated business owners have been using for decades. The problem is not Einstein's problem. The problem is not that the tax code is hard to understand. The problem is that most people never sit down and actually try to understand the part of it that applies to them. They outsource that understanding entirely, and that person they outsource it to is their CPA, who is only focused on compliance, on accuracy, and filing a return that does not attract scrutiny. That is a valuable service, yes, but it is not a tax strategy. And when you're earning $200,000, $300,000, $500,000 plus, your biggest financial enemy is not market volatility, it is not inflation, it is tax drag. The slow, steady, automatic erosion of your wealth every single year because there's no real strategy behind how your money is structured. You are reactive instead of proactive. You are paying your tax bill instead of engineering it. And the people who understand this, they are not necessarily earning more than you, they're just keeping more of what they earn. And that is the entire difference. Capital perseverance is not about making more money. It is about losing less, and losing less to taxes is one of the most powerful financial moves available to high earners, because every dollar you do not give to the government is a dollar that can compound in your portfolio, in your real estate, in your legacy. Now, here's where real estate and oil and gas comes into this, because real estate and energy is one of the most powerful tax advantage asset classes in both the American and Australian tax codes right now. Depreciation, 1031 exchanges, opportunity zones, cost segregation studies, these are tools that can legally defer or reduce your capital gains burden in a way that a traditional stock portfolio simply cannot match. And beyond the tax efficiency, you are building something tangible, something you can see, something you can pass down to your family, something that does not disappear in a market correction the way paper assets can. But, and this is where most high earners get it wrong, real estate only works as a tax and wealth strategy when you are buying it right. Overpaying for the wrong property in the wrong market does not offset your gains. It creates new problems, which is why strategies have to come before the asset. You need to understand what you are buying, why you are buying it, and how it fits into your broader tax picture before you ever sign anything. And this is the gap most high earners fall into. They know real estate is good, they have heard about 1031 exchanges, but they do not have a clear structured strategy connecting their income, their tax liability, and their investments into one one coherent plan. They are working with 3 different professionals who are not talking to each other: a CPA, a financial advisor, a real estate agent, and none of them are looking at the full picture simultaneously. The result, it's predictable. You are leaving money on the table, potentially a significant amount of it every single year. And Einstein also said something else. He said something less quoted but equally important. He stated, "The definition of insanity is doing the same thing over and over, expecting a different result." If you have been filing the same way, working with the same professionals in the same disconnected structure, and watching the same chunk of your earnings disappear every April, that is not bad luck. That is a strategy problem, and a strategy problem has solutions. So, start by understanding the tax codes that apply to your situation, not to replace your CPA, not to do your own return, but to be informed enough to have the right conversations, to ask the right questions, to lead the strategy yourself, and bring it into the right experts to execute it. The most financially successful people that I have ever encountered are not the ones who hand everything off and hope for the best. They're the ones who understand enough to direct the process and who have built a team around them that is actually looking at the full picture at the same time. That is what building real wealth looks like, not just earning more, but structuring smarter. Einstein found income tax the hardest thing in the world to understand, but here's the thing about hard things. They only stay hard until someone who knows them sits down and explains them to you. You just spent 4 to 5 minutes understanding why you are overpaying. Now do something about it. The link's in my bio. Let's have a one-on-one conversation about your specific income, your specific gains, and your specific tax position before December 31st. Not your CPA in April, not your financial advisor who does not talk to your real estate agent. One person, full picture right now. Einstein could not figure out the tax code, but he was also not trying to reduce his capital gains before year end. You are, and now you know where to start.